Financial reports, balance sheets, income statements, and cash flow statements are powerful legal evidence. Their careful analysis can reveal fraud, misrepresentation, and financial health, playing a pivotal role in court cases, regulatory actions, and contract disputes. Introduction: Why financial reports matter in legal contexts. Financial reports are not just business tools. They are critical legal evidence. Courts, regulators, and forensic accountants rely on these documents to establish facts about a company's financial position, detect fraud, resolve disputes, and determine damages. The legal admissibility of these documents depends on their relevance, authenticity, reliability, and proper chain of custody. 2. The three key financial documents: identification and legal interpretation. A balance sheet. What it shows: a snapshot of a company's assets, liabilities, and equity at a specific point in time. Legal relevance. Proves solvency or insolvency in bankruptcy cases. Reveals asset overvaluation, hidden liabilities, or off-balance sheet financing in fraud cases. Enron's use of off-balance sheet entities to hide billions in debt stands as a landmark example of financial deception, with forensic accountants playing a pivotal role in exposing the fraud and providing crucial evidence for legal action. Enron's 2001 collapse was driven by its deliberate use of off-balance sheet special-purpose entities, SPEs, notably Chuco, LJM1, LJM2, and the Raptors, to conceal over $2.5 billion in debt and inflate reported earnings. These complex structures, orchestrated by CFO Andrew Fastow, were designed to appear independent, but were actually controlled by Enron insiders, violating accounting rules and misleading investors, analysts, and regulators about the company's true financial health. Forensic accountants, using advanced data analysis, transaction tracing, and document review, uncovered these hidden liabilities. Their findings became central evidence in criminal and civil proceedings against Enron executives, auditors, and the company itself. The Parmalat scandal is a classic example of how overstated assets, hidden liabilities, and fictitious accounts can be used to deceive stakeholders and inflate a company's financial health. The Parmalat scandal is a textbook case of financial statement fraud, involving asset overvaluation, hidden liabilities, and fictitious assets. Parmalat inflated its inventory and goodwill, concealed nearly $10 billion in debt through off-balance sheet entities and offshore subsidiaries, and reported a fake $5 billion bank account at Parmalat as an asset. These deceptive practices misled investors and regulators, ultimately leading to massive losses, the company's collapse, and sweeping global regulatory reforms. Parmalat Case Study. Red flag details. 1. Asset overvaluation. What happened? Parmalat reported a non-existent $5 billion bank account as an asset, dramatically inflating its balance sheet. How? The company's subsidiary, Parmalat, was used to record this fictitious asset, with forged confirmation documents sent to auditors. Impact: this misrepresentation deceived investors, creditors, and regulators about Parmalat's true financial position. Parmalat hid nearly $10 billion in debt by moving its obligations to offshore and nominee entities, disguising them as equity or shifting them off the balance sheet. This deception made Parmalat appear far less leveraged than it actually was, misleading investors, creditors, and regulators about the company's true financial health and risk exposure. Parmalat fabricated fictitious assets by creating fake bank accounts and receivables, most notably the $5 billion Parmalat account. The company supported these non-existent assets with forged bank statements and confirmation letters, successfully deceiving auditors and investors. When the fraud was eventually exposed, it resulted in catastrophic financial losses and a collapse of trust in the company. Balance sheets, income statements, and cash flow statements together give lawyers vital insights into a company's financial health, supporting litigation, due diligence, and compliance. Mastering these tools turns complex data into actionable legal evidence. Next up, dive deeper into the income statement. Learn how to spot red flags and uncover financial misstatements in the next lesson.